If you can't get in and out of a position, then you've got all sorts of problems. Hello everybody. Today's question comes from Olivia, who asked us, following the launch of our new global fund, as a long-term investor in your Australian value fund, which has done very well, thank you Olivia, why are you now shifting your focus overseas? That doesn't seem like your natural habitat. That's actually a really solid question, Olivia, and fortunately for me today, I'm joined by Vas, our Chief Investment Officer and co-founder of the business, who's perfectly placed to help discuss this question. Vas, did you want to give your first thoughts to Olivia's question?
Thanks, Michael. Yeah, that's a good question. So certainly, if you were to look historically, we are clearly Australian equity specialists. But first and foremost, I think we are value investing specialists. So historically, yes, our mandate has been domestically focused, looking locally. That often means kind of getting out of the office, visiting companies, getting an information edge at the coalface. But that's, I guess, one way of finding value, and it's certainly not the only way.
Yeah, and if I could add to that, Vas, I think whenever we've researched local companies or sectors in the past, we've almost always also compared them to their international peers. It's just that historically we haven't been able to invest directly in many of those ideas, not because there was something fundamentally off about the investment reason, but because we just didn't have a mandate that allowed us to invest in those stocks. But look, we've often found a way, and Olivia, as a long-term investor of ours, would certainly know about our satellite funds, the gold fund, the offshore oil gas fund, all of which have done really well. Those were designed to, I suppose, capture the international opportunities where Aussie markets couldn't give us the sort of access that we were after.
That's exactly right, Michael. If we look at the Australian market, there's approximately a couple of thousand listed entities versus internationally there would be tens and thousands. So by nature, the global opportunity set is vast, and uncovering value to us makes sense. Another, I guess, rationale for looking overseas is the liquidity factor. Liquidity is larger.
Yeah, I mean, it's almost on a completely different scale. We actually spoke about the Australian liquidity constraints and challenges, I think, a couple of videos ago, where we explained that, while our goal, obviously, as value investors, is to find these wonderful companies trading cheaply based on the fundamentals, if you can't get in and out of a position, then you've got all sorts of problems.
Yeah. Like, for example, if we were to say, let's look at the value lens domestically, let's look at companies worth $20 billion or more, we're really only talking 30 plus stocks.
Yeah, basically the top 20.
And so, whereas overseas, literally, it can be defined as under the radar, yet its market cap might be 10 billion US.
Yeah, no, that's actually a good point. You know what, we've got time. How about we provide a quick comparison of, say, a company or a business that exists both in Australia on the ASX and also on an overseas market. Give us a sense of how the different markets can behave and how different the opportunity set might be.
Sure. I think a good example is Domino's UK PLC.
Yeah.
So the idea actually came about by looking at the domestic Australian listed Domino's. And then we found out that there's an equivalent Domino's listed in the UK. So the interesting facts about the two businesses is the Domino's UK has approximately a 50% market share of the pizza market, whereas the Domino's in Australia has about 20%. And then if you look at some of the metrics, the Domino's UK, we believe, is a better business. It's better run. It has better growth prospects. It has a larger market share. Its dividend yield currently is about 6% versus the Australian Domino's about 3.7.
I think it's got less debt as well.
Less debt, correct. And also from a price to earnings perspective, the UK Domino's is less than 10 times versus the Australian Domino's that is about 20 times. And yes, it was 30 and it's come down to 20, but on all metrics, it's far superior.
Yeah, it's almost crazy. I mean, isn't it the same brand, the same concept, yet in one market it's trading at 20 times in the Aussie market, and in the other, in the UK, it's trading at half that with better fundamentals. But that's exactly the point we're making. Good value can really exist anywhere, and the method of how we find it might vary depending on geography, but at the core, we're value hunters, And being able to invest in overseas markets really just opens up a bunch of opportunity to us that were previously closed.
And I guess it's never really sat well with me just because a listed company is in the US or the UK that, we can't invest. And so if it's a great business at a reasonable price, why can't our investors have exposure?
Yeah, no, I agree. So what's the two takeaways from today, from Olivia's question? I think number one, value certainly exists everywhere, both locally and internationally. And I think right now we're probably finding more of that overseas, but that could change in an instant at any time. And I think number two, while research methods may differ by market and by opportunity, the basic principles of valuation and the importance of primary research don't change. I mean, ultimately, you've just got to know what you own. Olivia, I love your question. It really gets to the heart of our process. We want to find the best risk-adjusted value we can for our investors. And for us, deep research comes first and geography comes second. Vas, thanks for joining us. I appreciate you giving me a helping hand here today. I hope this gave you, Olivia, and everybody else watching a clear picture of where we see the opportunity. And as always, if anyone has any questions you'd like us to tackle in a future video, please make a comment below or reach out to us. Until next time, bye for now.